Since the 1600s, people have been putting their money into stocks and shares, which is an older form of equity investing. Investing in the stock market has been a valuable option for more than a century. But in today's world, a lot of people still have the outdated concept that the only individuals who can profit from investing in stocks are those who already have a lot of money. The archetype of an individual who invests in stocks is a middle-aged or elderly person who has millions of dollars stashed away in the bank already. Today we are going to talk about investing in stocks for beginners. If you think that it would be worth your time, the first thing you should do is give this video a thumbs up. We appreciate your attention, and with that out of the way, let's get started. Purchasing ownership stakes in a public firm through the purchase of stock is the definition of stock investing. These individual shares make up what is collectively referred to as the firm's stock. If you choose to invest in the stock, you are betting that the company will continue to be successful and expand over time. When this occurs, the value of your shares may increase, and other investors may be ready to purchase them from you at a price that is higher than what you first paid for them. That indicates you have the potential to make a profit if you choose to sell them. Putting money into the stock market is a marathon, not a sprint. When it comes to making money in the stock market, it's important to maintain a diversified investing portfolio and to stick with it no matter what the market does. In point of fact, stock investing can be profitable for virtually anyone who is interested in pursuing it, and you may get started in the market even if you only have a small amount of money to invest. Why stocks are so valuable? To get things moving, let's take a look at some of the numerous compelling arguments that point to the superior returns offered by stock market investments. The word stock is the symbol used to refer to an investor's stake in a company that is traded on a public exchange. If you purchase one share of a company's stock at the price it is going for on the market at the time, you will effectively own a piece of the business in question. Companies with a solid reputation and solid performance typically see their stock prices rise over time. The entire price of the stock market has a tendency to climb as we have access to new technologies and higher levels of productivity. This, in turn, ultimately assists investors in growing their wealth at levels that are significantly higher than inflation. In addition to this, many businesses give back a portion of their profits to their shareholders in the form of dividends. If you own shares in one of these firms, you may be eligible to receive a dividend payment equal to a small percentage of your investment each year. The price of stocks is known to be somewhat unpredictable and to go up and down. But over the course of a lengthy period of time, they are extremely trustworthy. You should be able to reliably observe a considerable growth in equity if you make astute decisions regarding your investments, if you keep onto your stocks for several decades, and if you have investments in a variety of firms and industries. Barriers to entry. The question that needs to be answered is how one may break into this market. There are two primary obstacles to overcoming before entering the stock market: a sufficient amount of capital and an understanding of how to make sensible investments. There are three aspects of one's financial situation that should be taken into consideration. Minimum account requirements. Before you may open an account to trade stocks at certain financial institutions, you will be required to have a certain minimum account value. However, other apps enable you to trade with no minimum amount whatsoever. And some minimums are easier levels to attain, such a $500 minimum balance. Transaction costs. Historically, when investors made a trade, they were required to pay a tiny commission fee. For example, they could have to pay $8 each time they bought or sold an item. This practice is no longer in place. On the other hand, free commissions are far more prevalent in the present day. In other words, there is the possibility that you will not be charged any costs for trading prices of each individual stock. The price at which individual equities are traded is the only variable that is still in play. It all depends on the company. One share can be worth less than $1. Or it might be worth several $1,000s. The majority of them cost anything between a few dozen and a few $100s each share. As a consequence, this obstacle to admission has diminished to a significant extent. Under the appropriate circumstances, you can start investing with as little as $10. But, in my opinion, you should strive to amass at least a few hundred, so you have more possibilities. You can start investing with as little as $10 under the correct circumstances. For many individuals, an initial investment of $500 is a decent place to begin. Buying your first stocks. After you have assembled some starting funds and funded an investment account, you will be prepared to make your first stock purchases. There is a lot of information to learn about technical analysis, how to read quarterly earnings reports, and how to balance a portfolio. But if you're just starting out, you may want to consider simply buying stock in companies that you personally have in-depth knowledge on so that you can gain an advantage. In the future, you will always have the opportunity to improve upon your strategy and broaden the scope of your expertise. Best stocks for beginners. The process of selecting stocks can be difficult, particularly for those who are just starting out. After all, the biggest stock exchanges in the United States each list thousands of different stocks. Although there are a lot of complex tactics and methods involved in stock investing, some of the most successful investors have achieved their success by doing very little more than adhering to the fundamentals of the stock market. That generally means using funds for the bulk of your portfolio. Warren Buffett is famously quoted as saying that a low-cost S&P 500 index fund is the best investment most Americans can make, and choosing individual stocks only if you believe in the potential for the company to grow over the long term. An index known as the S&P 500 includes approximately 500 of the most prominent publicly traded corporations in the United States. Over the course of the previous half-century, its typical annual return has been roughly equivalent to that of the market as a whole, which is approximately 10%. Investing's biggest lesson. The process of learning how to invest in stocks can seem intimidating to those who are just starting out, but all that really needs to be determined is which investment strategy you want to follow, which type of account will work best for you, and how much of your money you should allocate to stock investments. If you enjoyed what you have seen, give the video a thumbs up, and make sure the notification button is turned on, so that you can be one of the first to watch any new videos that are uploaded.